So, do you pay tax when you sell your property? If you watched my previous video, probably you saying yes, we pay tax when every time we have an income. In this video, I'd like to explain the taxes you pay when you sell your property, either as an individual or as a limited company. And I hope it helps because my videos are supposed to be help you to understand rather than actually doing the thing so that you know what to do. But before we go on, I'd like to introduce myself. My name is Ola Sulaiman. I'm a chartered accountant. I'm the founder of Runs Accountant. We've worked with several businesses, landlords in the last individuals in the last 8 years, and I'm also the author of the Diary of the Tax Girl. So I hope this video would help. So now the question is, do you pay tax? Let's start from that. When you sell your property. Now, if it's the property that you've lived in all through your stay in the UK, and you don't have any other property, no, you don't pay taxes. However, you still need to let HMRC know about the disposal of the property. Most of the time, some individual would move the property from a limited company. In that case, then, even though you're not paying taxes still because you can claim that relief, I would always still advise you to make that declaration. But in this video, I'm talking about those that have second homes or third homes, or they're disposing their properties. Now, it's great if you're an individual, you'll be treated under capital gain tax. And if you are a limited company, when you sell the property, you'd have to declare the tax under corporation tax. Now, for an individual, now it's treated differently totally from a limited company. With an individual, when you sell your property, the HMRC is interested in the gains. I've been told several times that, oh, I paid off the mortgage. HMRC is not interested in the mortgage. All they want to know is when you bought the property, how much was it? Now that you're selling it, how much is it? We're interested in the gains. So, for example, let's say you're selling the property for 300,000, and that's your sales proceed. And then when you bought the property, it was for 100,000. So, even though you've used some of that money to pay off the mortgage, HMRC is not interested. They're interested in the gains. In this case, it's £200,000. Now, they want you to declare this. In the olden days, you declare this just on your self-assessment returns. But they changed the rule about last year. They changed it to you need to declare within 1 month, 30 days of actually exchanging the property. But now they've extended it to 2 months, 60 days after exchanging or selling the property. Now, after you submitted this return, it's called a capital gain tax return. It's a different new thing entirely. You still then need to then put that information in your self-assessment returns when you're preparing your returns. The reason is because at times you could have said, oh, my tax is going to be 20%, and then HMRC has applied 18% on your capital gain tax, and you've paid that. And then at the end of the tax year now, you've gone and then your income is at 40%. That means HMRC should actually have charged 28%. So the self-assessment helps them to actually make sure you've actually paid the right amount of tax when you submitted the capital gain tax return. Because when you have a self-assessment shows all your income in all through the year. So the right amount of tax will be the right rate to be applied. So for individuals that earn 20% in their other income, the rate is 18% of the gain. So in my example now, to be 18% of the 200,000 that you'd have to pay within 30 days to the HMRC. And for an individual that earns at 40%, to be 40% of your capital gain tax. Now, HMRC allows you as well to deduct some expenses to reduce the gains. For example, if you've done some refurbishment in the house. Now, please remember that refurbishment that you've done to the house, if you've claimed a relief in one way or the other, you can actually bring in other capital gain tax again. Because capital gain tax is different from income tax. So that's why capital gain tax is more about things that have value, like changing the roof of the house, like extending the house, like doing major works in the house. Now, while you were submitting your self-assessment returns, you could not actually claim it. You've been told you can't claim it. So this is the time to actually claim it to help you to reduce the tax that you pay. Now, this property as well, if you've lived in it at some point in time too, you can actually claim some relief as well to help you to reduce your tax. So at the end of the day, it's about getting the right advices, reading, getting information, and making the declaration. I've seen a case of when someone's house was, this was even before the capital gain tax regime. Someone's house was repossessed by the bank, and then HMRC came like almost 8 years after.
Okay.
HMRC still came 8 years after the lady had disposed the property to try to recoup the tax unpaid. So you could say, how do they have this information? They do. Because estate agents, all the chain that is involved when you were selling property, have a duty to actually make this declaration to HMRC. So now, the reason why they're actually very angry about capital gain tax is because it's a lot of money that is involved. Because the gains, properties literally, for example, my example that I just gave now, imagine having a gain of 200,000 and all of a sudden you are having to give HMRC 18% of that. So they know that you don't like to give them the money, but they want the money. So making the declaration on time is good, because imagine penalty on that either. So I would definitely advise you that if you've disposed the property and you've not made this declaration, I'll do it as soon as possible rather than saying I'll wait till the HMRC knocks on my door. Now, for an individual that the property is in a limited company, for limited companies they don't submit capital gain tax because it's just an individual thing. You'd have to declare the profits through your account when it's being prepared at the end of your accounting year. I hope this video has been very, very helpful. Our business have supported a lot of landlords that have disposed their properties in the past, and we'll be glad to support you in case you're planning to sell your property very soon and you need support with your capital gain tax. Thank you very much. My name is Ola Sulaiman.